This was absolute. This is the worst case of collusion you could possibly imagine.
Considering they're able to change the rules on a whim and they can take out short positions that could potentially be based on rules they just changed themselves. Hello and welcome, everyone. Today's video is going to take a look back at January of 1980 when silver reached about $50 per ounce. Adjusted for inflation today, that would make silver around $200 per ounce today. What happened in 1980 that caused the price to get this high? Well, the Fat Cat Hunt brothers had a huge position in physical silver as well as the paper market, and inflation was very high as well. As we shall see, the similarities to today are quite high as well. This is a cautionary tale that we can all learn from. Here to help us dissect the details of this event is Oren Elbaz, also known as the Silver Hermit. Oren, welcome back. How's it going today?
Hello, hello. Everything is fine. Thanks for having me.
You bet it's always great to have you on. When the Dallas oil tycoon Haroldson Lafayette Hunt, or H.L. Hunt, died in 1974, he left a billion-dollar fortune to his family. He was said to be one of the top 8 richest people in the U.S. at that time. Nelson Bunker Hunt was the oldest of H.L.'s 4 sons and was said to be the richest man in the world in the 1960s due to oil investments in Libya. Nelson and his brother Herbert believed that because of inflation, silver would become a safe haven asset for average investors. They thought gold would be too precious to use in everyday transactions for the average citizen, and that once again, silver coins would become a means of exchange. So these sound like some of the same reasons retail investors might be interested in buying silver today. Do you think the silver market is in a similar position today?
Yes, I was, when I first started reading about this case, I was quite surprised to discover that the conditions back then were very similar to what we're seeing today. Well, first of all, this was, of course, the beginning of the inflation, the great inflation of the 1970s. As we all recall, this was exactly when Nixon took the US off the gold standard in 1971.
Yes.
And inflation was beginning to creep up all throughout the 60s. But after the US got off the gold standard, it really started to pick up, and it became a real problem which everyday people started feeling in their pockets, whenever they went to the supermarket. And at the same time, it appears that there were also silver deficits, which is probably what got Bunker Hunt interested in silver in the first place, because as he himself wrote, world production, mine production of silver at the time was about 300 million ounces per year. But the consumption of silver was 500 million ounces per year, which means that there was a shortfall, a deficit of about 200 million ounces per year, which is pretty similar to what we're seeing today. And the thing is that the shortfall was covered by governments, the governments of the world, dishoarding their silver. Back then, since many countries used to issue silver coins, the governments of the world used to keep silver reserves. And around the 1960s, after the US stopped issuing silver coins, other nations followed suit and also removed silver from their coinage and started selling their silver back into the market. And this is why the price of silver was quite stagnant, even though there was a huge deficit. And by the way, I want to point out that, in my view, every time you see a deficit in a commodity, it means that you're seeing more consumption than production, that's indicative that the price is probably too low because the true price represents a balance, a point of balance between supply and demand. And when the market is balanced, you shouldn't see such deficits. So Bunker Hunt realized that the price of silver was probably too low, that there are deficits, that there's eventually going to be a shortage, and that inflation was acting in the background to push the prices of commodities up. So during the 1970s, he started investing heavily in silver. Now, when we look at the price action during the 1970s, the early 1970s, the price of silver indeed rose from about a dollar and a half per ounce in 1971 up to $6.50 per ounce in February of 1974. I'll repeat that. That's from about $1.50 per ounce in 1971 up to $6.50 per ounce in February of 1974. As the dollar was no longer linked to gold, the U.S. government looked for other ways, so to speak, to back it or to link it with the commodity sector. And the way they did it is through signing an agreement with the Saudi kingdom that the Saudis would sell their oil for dollars only. And this created as though the demand in international markets for dollars, because if you wanted to get Saudi oil, you needed to have dollars. So this demand kind of well, the price of gold also, the price of gold and the price of silver went into a consolidation. But it wasn't enough to kill the inflation. After a few years of consolidation, the price of gold started to rise again. I'll just mention that back then the price of gold went from $40, about $40 an ounce in 1971, all the way to $180 an ounce, and then it had a correction. As we said, the petrodollar agreement, it kind of tamed inflation for a while, but it wasn't enough in order to conquer it. It continued.
Yeah, thank you for bringing that up. Yeah, June 9th of 1974. And then, of course, the 50-year anniversary of that was June 9th, 2024. And it just so happens that they quit selling oil exclusively in US dollars at that point. Um, of course, there was a lot of uh, information that there had been a contract that ended after a 50-year time period. Some people are saying that no such contract existed, but it just so happens, within a few days of June 9th, 2024, they quit selling US oil in that was denominated in US dollars. So pretty big coincidence, but I'll just leave that at that. And it makes sense that market will naturally balance out if the price is too low. It will find that equilibrium. So what were they buying? It looked they were started buying paper contracts for silver as well as physical metal. When they bought contracts, they were actually asking for delivery of these contracts as opposed to taking the cash settlement option, which is what usually happens with these contracts. According to Monex's article, it's estimated the Hunts acquired about 37,000 1,000-ounce silver bars in this time period. Now, these are big numbers, but were the Hunt brothers acting alone or were they being sneaky about these purchases? And were they really cornering the market?
Yeah, so according to my figures, at the top, at the height of their acquisition, they amassed roughly 100 million ounces of silver.
Yikes.
Now, most of it, about two-thirds of it, they actually took delivery. That means they indeed purchased futures contracts at the COMEX in New York, but they weren't just interested in some short-term transaction. They weren't in it just to make a quick buck. They actually stood for delivery. That's one thing that indicates that they weren't trying to manipulate the market, or they weren't trying to corner the market in some kind of a quick transaction. This was a long-term investment as far as they were concerned. And also, people who try to corner the market are usually quiet about it. They don't advertise it, to other people. And the Hunt brothers were quite vocal about their position on silver. And they told everyone who was willing to listen that they're investing in silver because they were hoping that others would join them. So that's another indication that this wasn't just, some quick attempt to exploit the futures market. This was a long-term position. And when you start reading about their ideology, you understand uh, why they chose this course of action. Um, I'm, I'm getting the feel that they were the original stackers.
Right.
They were interested. They came up with the idea of a silver squeeze. They were concerned about inflation, and they were concerned about the dollar becoming a fiat currency. And Bunker Hunt said that he was concerned, I'm quoting, about the political instability, the civil turmoil, the financial catastrophe of hyperinflation, and moral bankruptcy. Okay, so even back then, they were concerned that the policy of the federal government and the Federal Reserve would eventually lead to a hyperinflation, just as we are concerned today. But they were also concerned about the moral bankruptcy of the American public. So,
That's really interesting because you had brought up a moral bankruptcy previously. Um, so one way to look at it is they were just really far ahead of the power curve, that they saw everything coming that everyone's concerned about today. I think when they are investing in the precious metals, and they were not trying to keep it quiet. That's another thing that stackers do. They encourage others to join them. They were encouraging others to join them. So I think that those are some pretty strong similarities that you pointed out.
yes, and they were hoping that what they were doing would eventually lead to silver being remonetized and used as money again. This was what they were aiming at. It was their assumption that the dollar would eventually collapse and that people would go back to using gold and silver in everyday trade. And since gold would probably be too expensive, then they would need silver coins. And they intended to be the bank, the source of that silver for everyday commerce.
That makes sense. And that was smart of them to go for that angle.
Yeah. And so during the 1970s, they accumulated physical silver. By the way, they enlisted a few of their friends, including some Saudi sheiks, in order to, accumulate silver. And they methodically took delivery on those futures contracts that they bought at the comics. And okay,
I
uh,
And I think that they're right too. I mean, silver is what the average people are going to need to use for daily transactions. So it makes sense that that was what they had targeted. So let me ask you, I guess I'll say this. Many say the peak for silver was artificially high because of the Hunt brothers having a significant position, of course, in paper silver as well as uh, physical silver. Without the Hunt brothers' participation in the silver market at that time, do you think there still would have been a spike for the price in silver like there was for gold? Or, what other factors might have impacted the price and how significant were the price swings in that at that time? I know you had talked about the $1 to $6, which was pretty significant if you think about it.
Yes. Um, it is my theory that this price spike would have happened anyway, because there was inflation at the time. The price of gold was rising, and as we all know, the price of gold and silver are highly correlated. So it stands to reason that silver would have followed gold at some point. Now, I don't think that, I think that the Hunt brothers merely pushed silver in the direction that it wanted to go anyway.
That makes sense.
Yes, and you know, um, it is easy for analysts and for people in the media to blame everything that transpired on the Hunt brothers because they were there, because they were very rich, and because it's just the way the media works. They like to find a villain and pinpoint what is happening on that villain. And we all know that the media loves to hate billionaires.
Right,
It's
absolutely.
their, yeah, it's their personal hobby. So, but the true culprit was probably the government, as always, because it was, the excessive spending and the fact that the US dollar was no longer backed by gold. This is what led to the inflation. This is what created the inflation.
Absolutely.
Yeah, and prices simply react to inflation. Prices do not cause inflation, prices react to inflation.
Yep, that totally makes sense. And it's so easy for them to make a scapegoat out of these billionaires that are famous. Um, I believe there had been a character on Dallas that was based on the father. Is that correct?
Yes, that's an interesting thing to note. The father, Haroldson Lafayette Hunt, the oil tycoon from Texas, was probably the inspiration for J.R. Ewing, the character of J.R. Ewing from the TV show Dallas.
So a lot of people in that time period were aware of the Hunt brothers, saw them as big fat cat tycoons. Um, And of course, that they had done very well and they were very rich, but it is easy for the media to blame them. And of course, the government gets off scot-free. It wasn't their fault that any of this had taken place. It's all the
Yes.
Hunt brothers.
I would also mention that, Bunker Hunt himself, he was a good businessman. He didn't just inherit his money from his father. He himself was instrumental in discovering and developing the oil fields in Libya during the 1960s. This is how he became personally, at the time, the richest man in the world. But unfortunately for him, in the early 1970s, Muammar Gaddafi rose to power, and Muammar Gaddafi nationalized those oil fields. So, he was out of the game at that point.
Yeah, he got pushed out of that market, but he sure did good to getting that area developed and making a bunch of money out of there. So
Yeah.
that's
And
pretty
and I'm
interesting.
guessing and I'm guessing that because the Libya affair was over, that he had the time to look at the silver market and to start investing in the silver market. I think the two events are highly correlated.
Yeah, he started looking around and saw all these indicators um, that silver should be going up in price, and that was a smart move for him.
Okay, so now the true action begins. All throughout the 1970s, the late 1970s, the price of gold is rising, but the price of silver is still in a prolonged consolidation below just below $6 an ounce. And then in late 1979, excuse me, in late 1978, it starts breaking out. And, the true run up in silver, as a matter of fact, took place in 1979. So in early 1979, the price of silver breaks out to new highs. And the Hunt brothers, they start, really investing heavily. They are dominating the trading floor at the comics at the time. Um, and so what happens is the price rises. By summer, it rose to about $9.50 per ounce, which, if you think about it, that's about a 50% increase, similar to what we've seen since the beginning of in silver since the beginning of 2024.
Oh, that's a good point. So they were
Yeah.
at like six and a half or so, and then they got up to nine something.
Yeah, from around 6.5 to 9.5. And then during the summer, there was a small correction, but then it starts, really picking up pace. By Labor Day, it reaches $11 an ounce. Now, you have to understand that all the while, there were massive shorts at the COMEX.
Right?
Just yeah, just like we have today, there were massive shorts at the COMEX. And in hindsight, we even know that some of those shorts, who were naked shorts, were some of the members of the commodity exchange itself. So the people of the Commodity Exchange of New York and the Chicago Board of Trade were betting against the Hunt brothers. So it is no surprise that the rules began to change. And what they did was they started raising the margin requirements. Now, as we all know, you can buy silver futures contracts on margin. This is a form of leverage. That means that in order to buy a contract for 5,000 ounces of silver, you put down a rather small amount of money, a rather small amount of cash to buy such a contract. And what the commodity exchange started doing is raising that margin requirement. It started at around $1,000 per contract, about $1,000 per contract, and gradually by the end of 1979, they would raise it all the way to $75,000 margin requirement for a contract. Now, what it does, um, it it forces you as the holder of that contract to shore up, to bring more money, to pay more money just to stay in your position.
That
And
that's a
usually,
that's a
go ahead.
ridiculous increase from 1,000 to $75,000.
Right. And that, by the way, that represents the full 100% value of a 5,000 ounce contract at $15 an ounce.
Right. So you went from being able to use very little leverage to needing to have the full true price.
Yeah. They went from being able to use leverage to almost not having any ability to use leverage at all, which meant that they had to somehow raise cash all the time. But the price kept going. Uh, in October, it went to 15 or $16 an ounce.
From 11.
Yeah, this is all happening in a very short span of time.
Yeah, that's just a few months later.
Yeah, so the commodity exchange is raising the requirements, but the price still goes on and on and on. And okay, by the end of the year, of course, as we all know, by the end of 1979 or in early 1980, it reaches $50 an ounce or $50.35 an ounce on an intraday basis. This happened on January 18th, 1980. And important to note that this was a Friday. As we all know, things tend to change over the weekend for some mysterious reason.
Yeah, we're not sure how uh, coincidental it is. That's when the paper trading markets closed. There might be some something to that.
Yeah, well, I'm guessing that on that weekend, between after January the 18th, after the price reached $50 an ounce, there were some people at the exchange and at the CFTC and perhaps at the Federal Reserve or even the federal government, which had a conversation and decided to stop it right there, right now, and change the rules. And over that weekend, they changed the rules so that there could only be liquidation. And when the exchange reopened on Monday, January 21st, the new rules said that only longs could sell and only shorts could buy. And you could also not stand for delivery of physical silver. So this, in other words, this means that they forced the liquidation of all the positions.
Absolutely. And I mean, and that's outrageous rule change to make over the weekend.
Yeah, that's outrageous for a number of reasons. Well, first of all, because it contradicts, the free market, the idea that that you are free to buy and sell, and that other people, from the wider public they should have been able to join in, but the commodity exchange didn't allow other members of the public to join the action. They also didn't, even if the Hunt brothers had more cash, they couldn't buy any more long contracts. They could only sell them.
Right. They completely changed the game.
And also, we have indications that not only members of the COMEX itself were short, but also during that weekend or prior to that weekend, members of the CFTC, the regulating body on behalf of the federal government, they went short themselves.
That's ridiculous. I
Yes,
almost feel like
because
there should be some sort of rule against them shorting
yeah,
commodities at the COMEX.
definitely. Because they knew for certain that the price is going down. The moment the market reopens on Monday, January 21st, the price is going to go down because they're forcing it down. So it was a sure bet.
Talk about insider trading.
Yeah, this is the worst case of collusion you could possibly imagine.
Yeah, that's pretty outrageous. Considering they're able to change the rules on a whim and they can take out short positions that could potentially be based on rules they just changed themselves. That just seems Like that should not be legal.
Yeah. And what's interesting to know that the price didn't collapse immediately. It retreated to the 30 to $40 region during February of that year, which, by the way, is the same region we are at right now. So,
Right.
I think it has, some kind of an historical meaning.
Yeah, in the first quarter, yeah, when you see big movements like this,
And for a while, it had support around $30 an ounce. But then, as the month of March arrived, as March started, the price began to collapse, falling during that month as low as $12 an ounce. And during that month, we had what we call Silver Thursday, in which the price truly collapsed. They had the largest drop, a single day drop. And this ushered in a 20-year long bear market, a 20-year long bear market in silver.
started on March 27th, 1980. So so it's estimated that the Hunt brothers lost about 1.7 billion in silver. What mistakes would you say the Hunt brothers made leading up to this? And their media portrayal was really ugly as well. So not only did they change the market on him, but then they blamed the whole thing on him. So it's pretty interesting. But what mistakes, if any, would you say they made?
Yeah, I'll just point out that this collapse in the price of silver. Well, first of all, the blow off top in silver coincided to the day with the blow off top in gold.
What a
They both,
coincidence.
yeah, it's not, I don't think it's a coincidence.
I don't think it is either, my friend.
Gold reached as high as $850 an ounce on the same day on January 18th, 1980. And by the way, another thing which happened at the same time was that the Fed, the Federal Reserve, raised the Fed's funds rate up to 20%, which means that getting credit was becoming very difficult. So it's no surprise that all those traders who wanted to join in, and they had to pay more for to fund their trading on the COMEX. So it became more and more difficult to raise cash and to support the market. And the Hunt brothers, they lasted. They didn't liquidate their position for a while. They tried to stay in the market, but as we said, in March, the price absolutely collapsed. And the media, of course, portrayed them as the villains. The media tried to peg the entire run up in the price of gold and silver on them, as though trying to portray it as though it was completely artificial. But we know that there were good reasons for the price to rise. And it
Absolutely.
wasn't it wasn't just some kind of a manipulation at the futures market. The price of gold and silver was rising um, because inflation was reaching a peak, and the public was losing faith in the U.S. dollars, and it's almost um, it's almost certain that the federal government was acting behind the curtains in order to shore up the dollar, to increase faith in the dollar and try to save the dollar, and that this was probably a coordinated action to raise rates on one hand, give people an incentive to invest their money in bonds again, to hold dollars, and on the other hand, to smash the price of gold and silver so that people don't have the incentive or become fearful of owning them. So you smash the precious metals and you elevate the dollar. And this way, this gave the dollar, a new lease on life, as they say.
Absolutely. It totally extended it for him. The inflation was really bad. This was a great way for them to push people back towards bonds. These are all good points that you made. And you know what else is interesting is the propaganda that had been put out by the media in that time period about the Hunt brothers. It is stuck to this day. I mean, most people, if you bring up the 1980s silver high, the first thing they're thinking is, oh, it's because the Hunt brothers cornered the market. And I mean, to some degree that they affected it, with their attempted squeeze, but the reality is this was going to happen. This setup is so similar to today as well. There was a deficit in the market. There
Yes,
was a
this
lot of
was probably
shortage.
going to happen anyway, perhaps more slowly, perhaps to a lesser extent, but this was going to happen anyway. They were probably only pushing the price in the direction that it wanted to go anyway. And of course, as we know, the media likes to take a complicated story and spin it and turn it into something very simple where you have the good guys and the bad guys and a fight between good and evil, and you have a villain, and it's easy to focus the public anger on corporations or billionaires. It's easier for them than to put the blame on the government. So, and probably the government has a hand in it in as well. And the media and the government are cooperating in order to mislead the public and give them the impression as though inflation is just, it's it's uh, it's a force of nature. They have no control over it. But as we know, inflation, is created by the government.
Absolutely. And I think the blow off top for gold at the same time really speaks to the market was heading this direction anyway, as you pointed out.
Now, I want to mention the sad part. Even though the Hunt brothers were forced to liquidate their position in the futures market, they still had a huge physical position in silver. They lost about 30 million ounces, but they still held on to 63 million ounces of silver physically.
And at the peak of this thing, they think that they had about a third of the like investment grade silver um, that was out there.
It was indeed about a third of the above ground inventory, which was not held in the hands of governments, the governments of the world, because we really have to remember that probably the bulk of silver back then above ground was held by governments. And the sad thing is that Bunker Hunt still believed, even after this debacle, after it ended, and even after the price collapsed, at the end of 1980, he still wrote that he believes that the price would rise again, that inflation would continue, that the price would rise again, and that eventually he will make a fortune on his silver investment. And little did he know that inflation was over, at least as far as the public was concerned, um, that the price of silver would grind lower and lower for 20 years. And I believe, this was a great heartache for him.
Yeah, imagine sitting on 63 million ounces of silver. And you know the fundamentals are there, and just watching them just grind it down over the years like that. Yeah, that would be painful.
Yes, that was extremely painful for him, and we don't know when or at what point he sold that silver. I'm guessing he had to liquidate that position because in February of 1985, the Hunt brothers were sued by the CFTC for allegedly manipulating the price of silver. And in September of 1988, they were forced to file for bankruptcy under Chapter 11 due to the various lawsuits against them.
That is brutal.
Yeah. So not only did the CFTC force them to liquidate their positions, not only did the CFTC take, the other side of the trade by its own members going short. They also sued them. They also went after them, and it took them almost an entire decade to settle the case. In 1989, in a settlement with the CFTC, Nelson Bunker Hunt was fined $10 million and banned from trading at the commodity exchange.
Dang. Could you imagine losing that much money and then having almost the entire next decade you're getting drugged through the courts, not knowing what the outcome of this is going to be, the whole time your investment in silver is just going down and losing money. And then you end
Yes.
up get losing at the end and getting
Yes,
fined
and
10
in
million.
addition, he also had to pay millions of dollars to the IRS
Oh my
for
gosh.
taxes and fines and interest.
Dang, that is a sad ending to the Hunt brothers story.
Yes. Well, we have to point out, they were still rich. They didn't lose all their money, although their fortune during the 1980s, the value of their assets went down considerably. So, I wouldn't shed too many tears for them. They stayed rich. Uh, they had other businesses, but it truly was, very, very painful for them.
Very unfair the way that they were treated.
Yes. I see them as the patsies. I see them as the way in which the federal government, they it found a way to blame the inflation on someone.
I think you're totally correct. They were totally scapegoated in this situation.
Yes. And at the time, they were absolutely shocked by those rule changes at the COMEX. They didn't believe that such a thing could happen. They were under the impression that they were living, in a free country with a free market. They didn't realize that, if you mess with the wrong people, then suddenly, all these rules can be changed overnight, just like that. Because even though they themselves were, they were rich and powerful, but they messed with powers even greater than theirs.
Right. And that's a big lesson from this. Um, when you're investing in the paper market, you never know if they might change the rules.
Yes, and this is the lesson that we need to learn from the case of the Hunt brothers. I think that their greatest mistake was using leverage because using margin accounts, buying futures contracts with margin is a form of leverage. Yes, you're able to
Absolutely.
pay a small amount of money and command, 5,000 ounces of silver, and it is enticing. It is very tempting to use leverage when you believe that the price can only rise. But of course, just as leverage works in your favor when the price is rising, it works against you. It's very punishing when the price is falling And then you get a margin call from your broker, for instance, asking you to send more money. And if you've used all your liquidity, if you've used all your cash in order to open that position, then you're in trouble. You're forced to liquidate it. Even if you still believe that the price of silver is bound to rise, you have to liquidate your position. And this is why we always say that those who use leverage are the weak hands. Yes?
Right. They're going to be forced out.
Assuming that there is volatility, that the price is rising and falling very rapidly, they can be forced out of their position.
Right.
And this is why we advise people to only invest in physical silver, only hold the real stuff. Because when you're holding physical silver without any kind of debt, then it's very difficult to take it out of your hands.
Absolutely.
For instance, if the COMEX opens on Monday and the price drops by 20%, it doesn't affect you. It doesn't affect you. You still have your silver. You can endure a rapid correction.
Yeah, you took some of your savings, from working, or your investments or whatever it was, you kind of flash froze that. Of course, there's some movement in the markets, of course. But it's out of the system. There's no
Yeah.
counterparty risk on it anymore. If you didn't take out leverage to buy it, yeah, you've completely pulled this wealth preservation asset out of the system.
Yeah, it's out of the hands of the commodity exchange.
Yes,
They can't
absolutely.
affect you. They can play with the price, but they
Yep,
can't take your silver away.
exactly.
So this is why this story is a cautionary tale. This is why we implore, the public, just buy physical and don't use any kind of debt, any kind of leverage. This way they can't take it away from you.
It's yours free and clear. And when the time is right, you'll be able to take advantage of that. Um, Based on how the market looks right now, I think the time would be an awful time to consider moving out of a physical silver position. But by all means, don't invest in paper contracts at thinking it's going to offer you the same benefits that physical metal will.
Yes. And I wanted to end this discussion by explaining or trying to argue why this time is different. Why this time around we do have a chance to squeeze silver. First of all, the governments of the world no longer have any silver to this hoard. This trend ended around, I think, 2013. Around 2013, that was the year in which the governments of the world ran out of silver to sell into the market. So that was like this continuous stress on the price of silver.
There's this
That
excess supply coming into the market, and that wasn't that long
Yes,
ago. So just 12 years ago.
yes, because they continue to sell silver in the market continuously all these years. And it pretty much ended in 2013, where pretty sure that they don't have any silver to sell. That's one thing. Another another thing, another element to the puzzle is that, during the 1970s, early 1980s, both China and Russia were behind the Iron Curtain. Yes, of course, under communism, the citizens of these countries were not able to accumulate wealth and they couldn't invest in gold and silver. So now, today, we have a, a far larger number of potential investors. There are far more people who are able to buy physical gold and silver and impact the market this way. And also, as we're seeing today, the governments of these countries, they are also significant players in this market. So back in the day, you had a handful of investors, yeah, the Hunt brothers and some of their associates, as though playing against the US government, which was, as I believe, colluding against them, using the Fed, using the CFTC, using the board of the COMEX in order to fight them. And today you have far more investors. You have powerful forces such as foreign governments. Um, they are. It's as though the army of silver stackers is far larger today.
Yeah, way more potential retail investors. They could make
And
all the silver disappear really quick, all the retail grade silver.
yes. And one last point that I want to make is that the US is in a far worse position than it was back then. Back then, although we had inflation, but the debt to GDP of the United States back then was only 25 to 30%.
Not bad.
Yeah, it was very low. So it had the ability to raise the Fed fund rate. It had the ability to raise interest rates to 20%. It could endure that kind of an interest rate. Today, with over $36 trillion in debt, the US government can't even sustain 5% of interest rates. And we're seeing that the current interest rate is already threatening to bankrupt the federal government. So the US government as though doesn't have the firepower to fight the silver squeeze anymore.
Yeah, they are out of ammo. And so if a
Yeah.
lot of retail investors start to pile into this space, plus um, their mine supply is not going to be able to pick up quickly, silver squeeze could really happen.
Yes. And of course, there's a lot more industrial demand because nowadays electronics was just starting back then. Consumer electronics was just starting back then. People had, they had a TV at home. That's true, but it was a luxury item even back then. It was a luxury item. Today, almost everyone has a smartphone, has a laptop. There's so many internet servers operating as we speak, just to keep this high-tech industry going. And so the demand for silver, the industrial demand for silver is so greater, so much larger that I think it also affects the balance of power.
Absolutely. And that's not going away either. Like you said, silver is in all electronics. It's in all of our personal computers. Basically, any modern piece of electronic equipment that has an on and off switch has at least some small amount of silver in it. We literally could not be recording this video right now if it wasn't for silver in our electronics. And the people watching wouldn't be able to watch it if it wasn't for the silver in their electronics. So it's critical for the modern age. So
Yes.
that's a really good point.
So they say that this time is different. That's the four most dangerous words in investing. There's this saying, but I do think that specifically when it comes to silver, it really is different this time. I think the Hunt brothers affair was as though the first skirmish in a war. And the second battle was, in 2011, when the price of silver reached $50 once again. And by the way, it stayed at that region between 30 and 50 for a lot longer than back then. Um, and I think that, as they say, third time's a charm.
That's right. I
So
like
this
the
is,
sounds of that. Third time's is a
yes,
charm.
this is our third attempt to break through that legendary $50 an ounce price. And I think that third time's a charm. So I think that this time we will be able to push through it, and the price of silver will rise to new highs. This could take a few years. I want to be cautious, and this could take some time. The
Sure.
price could, yeah, the price could rise to $50 and then, consolidate around $50, or it could just, pass $50 and then they retreat back to 50. So there are a few scenarios that we can imagine, but I think that eventually, in a matter of a few years, we could see silver trading for well above $50 an ounce.
Well, I wouldn't surprise me at all if you're right. And I also think that silver is going to be going up in price a lot. Um, I really like the idea that the Hunt brothers 1980 fiasco, we'll say, was like the first skirmish uh, in the battle of silver returning to its fair market value. Um, so, I think that that was a great correlation, and we're about to enter round three. And I bet you're going to be right. Third time will be the charm, folks. Orrin, thank you so much for your insights about the Hunt brothers. Everyone, please check out the Silver Hermit on X and YouTube. There will be links to his accounts in the description. Please don't forget to hit the like button and subscribe to the channel for more content like this, and also so you don't miss our next interview. To everyone who watched today, I hope you have a great day out there, and we'll catch you in the next one.